market trends and where I think they're headed. Okay. These are just projections that I see based on the data that we're tracking and trending. I'm going to give you the resources that we're getting it from. But I also want you to understand kind of where it might be going over the next 60 and 90 days, because we're going into a tax season here soon. It looks like, I believe I seen an article about IRS starting to take returns around January 28th or 29th. And so rolling into February, you should start seeing customers with returns. But here's my concern with that. Last couple tax seasons has been very, very light. I'll go over that data here in a little bit. But it's not, I think this year is going to be even as light, okay, and even lighter, because we have obviously inflation still impacting people, debt is impacting people, repossessions and things are up, higher interest rates and things like that. So, and we're going into an election year. And so an election year is going to kind of scare a lot of people into holding back a little bit until they understand where the economy is headed and going. So make sure that you stay ahead of your inventory. As always, keep it lean and clean. And what I mean by that, very few or no cars over 60 days old. 45 needs to be the new 60. Let me go over something that I shared last time. Let me go with, and so if you're listening to this podcast, which I encourage, you can find that on iTunes or anything like that. I'm going to go over a bunch of market trends and everything that you might want to check this out on YouTube. Either one of these, go ahead and subscribe to, and you'll get our typically weekly or biweekly updates. So here's some charts. I shared this on Facebook and LinkedIn the other day that I believe this is Manheim's used vehicle value index. Okay, this is where we are seeing the value of inventory or dollars cars, and you could see, and let me scroll down here, 2014 it was around 12 grand, okay, and it built all the way up to almost 24 grand, 10 grand higher going into 2022. Okay, and so let me kind of go over what I think. I believe that it's going to hit around 16 probably by the end of this year or beginning of next year, but it might even hit mid-year. And let me explain the reasoning I'm saying that right now. Let me go pull up my calculator, because if you notice, we went from 12 grand to 14 grand in a 6-year period. Okay. So we went from 12 grand to 14 grand. Okay. 12 grand divided into 14 grand. It's obviously 2 grand. It's a 15% increase in 6 years. Okay. So 6 years from there, 2020, right, would be 2026. Okay. So a 15% of 14 grand times 0.15 would be 16.1. Okay. By 2026. Okay. Now that's only 2 years from now. But here's the thing, and the reason why I think we'll get there sooner than later. If you look at the drop off from around 23 grand down to 20 grand within a year and a half, okay, that's a 3 grand drop. And then if you look at even at beginning of 2023, it was around 21 grand and it dropped down to 18. So you're talking 2 to 3 grand drop in a year. A 2 to 3 grand drop right now would put you at 15 to 16. So just based on COVID didn't happen at all, we'd be at 16 grand by 2026. But based on the trajectory of these drops, I believe it's going to be sooner than later. Now, let me go over a couple other information that I want you to see. One is we track all of our dealers' activity. We're talking hundreds of dealers all over the country, Highline stores to, let me stop sharing and let me share again. I'm going to have to bring up this window again. And let me go here. All right. So we track both their volume, what they sold in 2 weeks, because again, I think that's a more accurate trend. I'm looking at what's going on in the last 2 weeks. Again, and next week, we're going to be mid-January. I don't want to be tied up on what happened in December, because a lot of times we finish December strong and into the month strong. And so I want to know how the beginning of the year starts. So I look at the last 2 weeks and I times it by 2. And so here's what's going on right now. Let's say if you are carrying 100 units, projected monthly sold, carrying 100 units, we track our top 10 dealers as far as login activity into our products, 0 logins, but we do take a monthly average. So right now, if the dealers are carrying 100 cars. The average dealer, the black number, is selling 84 out of 100. Okay, dealers logging in at least 10 times, or our top 10 dealers are selling 87 to 90. Okay, about 90 units if they're paying attention and staying ahead and of their inventory. They're carrying 100, selling 90. Just compare that to where you're at right now. I just got off the phone with the dealer, had over 100 units. They're selling about 40 of them. Okay, so that's going on right now. Everybody, and if you look at the metrics, our green dealers are our, again, top performers. Just in August or September, they're selling 130 if they're carrying 100, well over 100 if they're carrying 100, if they're paying attention to the yellow and the green. Everybody started slowing down November, December. Now our green, our active dealers again are starting to trend up. Now that's volume. Okay, that's averages and so forth. So the dealer's not paying attention, not really logging in. They're selling 60 or 70 with 100 in stock. Now let's talk about gross. Okay. Now we track what you sell in the first 30 days. The best time to make the most money on a car is within the first 30 days. So our dealers that again are paying attention are selling about 50 to 55% of their inventory in the first 30 days. The average is 46%. That number is too low. It needs to be higher than that. You want to be 60 to 70%. But again, as things are slowing down, cars are bleeding through. We're not reacting fast enough. But as you can see, the green line, the dealers are starting to pay attention and getting this cars moved. And then here is why. I've shared this chart many times before. I'm giving you a current update of this. I'm taking it from 3 different reports. Okay, the blue line and the black line represent information from Black Book market data. Okay, Black Book will share every Tuesday, they share their market trends and a couple of things. The black line represents the average age of retail days to turn. So the average age is 58 days right now. Of the cars listed online, they're taking 58 days to sell. That's a little bit down from 63. Again, a good little strong finish to December there. But I want to point out something here. This goes all the way back to 2020. And remember COVID shutdown here back in March of 2020? The average age got up to 53 days. Okay. When people were sitting in the basements of their house afraid if they're going to have their job anymore, if they're going to get a paycheck and stuff. So the cars are right now are sitting longer than they ever have, at least since the COVID period. And I would say that's a big red sign there. And matter of fact, it's gone up ever since May of 2022. Those average age gone up. It did drop off a little bit in September range. And then again, it's just been building up since. So cars are sitting online. Second thing I want to tell you about is wholesale percentage. Okay, what's selling at the lane? Again, Black Book is reporting 49% of the cars running are selling at the lane. Now, what happened this time last year? Okay, what was selling at the lane in January all the way to March started picking up again as tax season cars were selling. Not at the volume, though, that if you look at previous years, you go back to 2022, 62%. Well, let's go back to comparable. Here's the 8th. 60% of what was going through the lane was selling in 2022. Again, we're at 49%. And then by tax season, it built all the way up into May to 73%. Last year, it only built up to 53%, and that happened in March, and then it just dropped down ever since. Okay, so we are at 49% last year. The high was at 53. So again, we're already behind the 8 ball. It could build up as more and more cars are being traded in. I just got off a meeting call this morning with 2 dealerships. They had a strong new car finish. They got a lot of trade-ins. Okay, that means that dealer's going to the lane less to buy cars. Okay, and they've got a little bit more trade-ins in that they're trying to shuffle around and get ready for sale. So what that also means is they got to hope, again, this market's here and eventually they might have to wholesale cars and that's where I believe wholesale is going to continue to drop these values going from 18 grand down to 16 grand. Maybe the reason why I say maybe by mid this year is if the tax season is a bomb, we're going to see it by June and July that these values just continue to drop down. Now, let's go the reason why is let's take a look at the shopper index. Now, what this is if you go to Google Trends, Okay. And I've covered this before in other meetings. If you have any questions, if you go to Google Trends, it will give you indication of how many people are going to Google looking for used cars. Okay. And again, I've compared this to people going and shopping and saying, hey, I want to go to Car Gurus to shop for cars. You're going to see the same patterns. Okay. Up and down patterns. Okay. Now, what I want to show you is, again, COVID shutdown. People looking for used cars was at 47. People were in their basement, didn't know if they're going to have a paycheck, didn't know if they're going to have a job, right? And where we're at right now in Shopper Index is right at 48. We're it's the lowest index of shopper activity than there has been. And so I've taken these numbers and I've compared it then to retail, wholesale, and volume. Okay, again, so the two data points. Black Book is the black line, average age of retail. The blue line, what's selling at the lanes. It's dropping. Not many cars selling at the lanes. Shopper Index is from Google. And again, that's very low. It's as low as COVID shutdown or even worse. Okay. Now, the second thing I shared with you earlier was where are our dealers 2 weeks sold percentages? Okay. We're sitting at 41%. The dealers are selling, as of yesterday, I pulled this data, 41% of their inventory in 2 weeks. So that's saying they're selling 82 units with 100 in stock. And you can see that's trending down. Well, how does this compare to last year? Again, last year, the shopper index right now was around 60s. Okay. We're in the 40s right now. We are less shopper index. And look at our dealers volume. They picked up in January 14th and it peaked in March 11th. And then it just dropped down ever since. And that peak of sale rate, okay, and volume. But as that was going on, the average age of cars continued to build up. Okay, they dropped off as cars were selling in January, and then they started to build back up by April. So my point is, and I'm going to stop sharing my screen right now. Let me go ahead and stop sharing. Is I believe that this market's going to continue to drop. You'll see some wholesale prices maybe go up as floors get reduced. As more cars are coming into the lane or more dealers are sitting on cars, they're going to drop the floor. Cars will be cheaper at auction and then they'll pick up. And they might stay strong over the next 30 to 45 days as dealers are trying to get more inventory for used car sales. We always seen, again, remember February, March, and that the wholesale volumes pick up. So as dealers are replacing these used cars, but I think, and again, I'm speculating here, but I believe new car volume is where it's going to come in at. Better incentives, rebates to help people out of negative equity because a lot of people are going to be buried. You saw 22 grand average values have dropped down to 18,000. People are buried in cars. They're going to need the new car incentives to offset it. They're going to need lower interest rate that these OEMs are offering to get their payments in line. So I think a lot of business is going to be done on new cars, which leads to more trade-ins, which brings in wholesale values, and values of used cars go down. There's more and more new cars. There's double the amount of new cars available as there was last year. The other thing is these fleet companies being Enterprise, Budget, all these rental car companies are getting more and more new cars too, because the manufacturers are going to continue to push them. And if they're sitting on dealers' lot, they're just going to get them over to the rental car companies. The rental car companies are starting to release cars. Matter of fact, my Facebook post, somebody said they haven't seen as many rental cars available since pre-COVID. Okay, so rental cars are becoming more and more available on the wholesale used car end. Repossessions are up. That's more cars on the wholesale used car retail end. There's going to be trade-ins coming in, more availability on used cars for the retail end. So that's my speculation going over the next 90 days here. It's going to be lean and clean. You're going to have to keep your inventory lean and clean to stay ahead of this, keep that inventory moving. If you'd like to see how we help you, again, we're not here to replace your inventory management tool, that being like a vAuto, VinQ, Max Digital, Dealers Link, whatever. We take that data, though, and we find out what's happening on your lot. They do a great job of figuring out what the market's doing, MMR's doing, book out data, but we want to focus on what's slowing your inventory down from carrying 100, selling 100, and getting that first 30 sale rate up. We'll help find those problems. And then we combine your CRM data. It doesn't matter if you're Drive Centric, Vin Solutions, Reynolds, eLeads, Dealer Socket. we grab that data and we combine your inventory into one tool with your lead management. From your trucks are sitting, let's manage truck leads. If your $30,000 to $35,000 cars are sitting, let's manage $30,000 to $35,000 leads and stop managing leads based on the age of lead. The product called Lot Walk, just like you do a physical lot walk, make sure cars are standing tall, customers are being meet and greeted. We do that in one tool. We also do weekly calls with you as an accountability partner, second set of eyes. Go over data like this and show you what we're seeing at all their dealers that we're talking to and what we think you need to be working on. So those weekly calls are crucial. Check out lotwalk.com. We're going to be at NADA this year. Check us out there. I'll be speaking. I'll be doing a workshop. So again, I'd love to meet you there in person, either with my workshop or at our booth. I hope this tip was helpful and have a great start to 2024. Thanks.